Hello guys, welcome to my channel again. And someone asked me a kind of question that how do I pick my liquidity, my inducement, and so on. I actually had a video on it on the channel. So, but I just want to point out some things and probably explain for anybody that is still finding it difficult to understand. And I believe this will save you a lot of time and a lot of money. But before, I want you to understand that trading is all about perspective. And I used to say it, the more you train your eyes to focus on one particular perspective, one particular thing, the better you become. And the clearer those perspectives will be. But if you're jumping from one thing to another and you feel like um, there is a fast way or a better way or an easy way for you to actually get to be profitable in this industry. I don't think there is any way like that. Probably you are just wasting your time. So you have to avoid that. Stick to one thing and just focus on it as long as you do the back testing, or maybe you forward test, or you shift the chart back and look at it and see the current pattern. Just take to the model and build your system around it. That's all you need. I've been doing this for about 5 years and I know the difference. I knew when I started, I knew what I see, the way I perceive the markets, and gradually up to this moment. So, and this has been working perfectly. The reason why I stay to this concept is because it's more realistic, it's easy to understand, and it's reasonable to me that okay, markets move like this most of the time. So any other thing the other thing you also need to be profitable is just your psychology, your mind. You fix your mind. Once you're able to fix your mind, believe me, this all these the challenges you're having will be resolved. So and that's how exactly it is. So let me show you something. A lot of people have uh, issue with identifying liquidity. See, let me give you an instance before I get to this diagram. See, what I know is if you are able to, for me, I would suggest you use two time frame. If you are using maybe 4 hours time frame, first thing you have to understand is to first understand where the 4 hours time frame is going. Sure, you understand. So when you are able to understand where the 4 hours time frame is going, then it will be easy for you to trade in that direction, probably in 1 hour or 15 minutes. So, but if you don't even understand where the market is going based on your system, then you are gambling. So, so in this case, let's say you and that the reason why I use this model to explain things to you guys. If you go to monthly time frame, all you need to look for is this model. If you go to weekly, look for this. If you go to 4 hours daily, even to your entry time frame, this is all the model you need. So you just go to higher time frame, look for this model, then come to your lower time frame and trade in this direction. For example, let's say this is our 4 hours time frame, and let's say market is here. For example, let's say market is here. Um, let's say market is here. For example, and we were able to understand that this is our liquid POI zone like this in 4 hours time frame or in daily. Let's say this 4 hours time frame. Okay, let me use it based on the time frame I use. I use daily time frame. So let's say this is a daily time frame, but this is also replicable in any time frame. So it's not about daily. The only difference is the higher the time frame, the clearer and the stronger the zone becomes. So, but if you go to 1 hour, you still see it up to a second, but it's just like they are not strong, and the volatility in the lower time frame is too much. So you will be seeing buy now, seeing sell now, and so on. So those are the confusion. So let's say this is exactly where the market is like this. Let's say this is where the market is currently. So and you go to, let's say this is your POIs in 15 minutes. This same POI, let's say this is it. So now you understand the market is buying. In 15 minutes, you will see strong bullish momentum. But in higher time frame, it's just driving towards your higher time frame POI. So this is what you are likely to see in 15 minutes. From this zone, from this, from this zone, this is what you are likely. Let's say this zone is what I want to draw. So this is what you are likely to see in 15 minutes. You are likely to see something like this. You are likely to see something like this. All these are just 15-minute drama. So all you need to pay attention is how is this 15 minutes coming. So if we were to mark the structure in this 15 minutes, we will say this is our high, this is our low, because inducement was taken in 15 minutes. Then market created another inducement. Then this is our high, this is our low. Then probably let's say market mitigates this level like this, and market mitigate this level. From this point now, your perspective will start changing to what? To lower time frames and to in 15 minutes to set structure. Now you've been buying to this level, or market has been bullish to this level. Remember, this is where you met the market, and immediately market mitigates this level. This is all you need to do. Look at this. This will serve as your inducement in 15 minutes, and this will serve as your structure low in 15 minutes. But because market mitigates your higher time frame POI and you want to engage in this trade as soon as possible, not when the market is already here, you want to engage, then it's easy for you to use this level as a change of character. Not because the character, the normal structure character is changed, but because market has mitigated this higher time frame. And anything below here, you can call it change of character. So, and one other thing is how market actually mitigate this level. If market close above this high, for example, let's say you have a candle close here, you will need, for you to engage in this market, you will need an inducement to confirm that this level really want to hold. How will you do that? All you need to do is to wait for market to do something like this. So once market do something like this, then you will know that this is your extreme order block. You see, this is just an extra confirmation, and all you need to do is to wait for this inducement to be taken out, then allow the market to mitigate this level, or probably fair value gap, but you must not sell below this level. You can sell anything above. So, but this is your, let's say this is your 15 minutes order block, then you can take your trade to this level. Put your stop loss above here or above your order block, but this is more safer than target whatever you want to target. This is exactly how you execute this trade. You don't need to stress yourself. And not that maybe this is a change of character, but in the recent, this is the major change of character based on 15 minutes time frame, and the process will continue. So if you're able to get a trade here, and when market gets to this level, you should expect a kind of structure. Maybe market will do something like this, then you should know that this level will also be your zone. Then if market come back here, then you can sell. So these are just the concepts. Liquidity is what is important in the market, not just your order block or your POI. So those are the things that is important in the market. I will use something like this. I will use a chart here. Sorry. I will use a chart here to explain something to you guys. So look at this daily time frame. When market get to this level, this will serve your as your inducement. Wait for market to come above here before you can buy. You can look for your order block here, mitigate, drop. Wait for this to, once bar break of structure happen, look for the last pullback that this leg did, mark it, make sure you don't sell below it. Irrespective of what the market do, just wait for market to go up, look for your POI, then sell. This is your target. Because any moment market come below this level, there's tendency that the market will also do the normal pullback, go for more liquidity. And if you are looking at it, these are the reason why the market is doing this. Let me show you something. The reason why market is going up, going down is because market need liquidity. But based on our concept, we understand that these are liquidity. Market might not really take everything, but it just need part of it. And sometimes market take everything. Look at this. Market take everything. In fact, sometimes market will even sweep this high, then now close down. It's going to be a sweep because any close above here is a change of character. So look at it. Market will actually need this. So you just need to understand this. Once you understand this concept, your problem is kind of solved. So let me briefly show you on the chart how I actually 24 hours, how I actually, sorry, 24H, how I can, how I actually see this concept, see this setup. Look at this. This is the daily time frame, and why do I mark this as my low? Why do I mark this as my high? It was because when market was coming, market closed above here, market closed above here. Then this was the last level that the market took out. But if you want to look at it, this was the level that the market took out. Then did what? Market close above here. Come and close above here. All these are internal structure. And I believe that this is where most traders get it wrong. They don't understand the difference between the major structure and the smaller structure, the internal structure. These are internal structure. You see all these things you are seeing here. It's still it's just the process for the market to do what? To come to this level. How the market will get here, you might not know. Market might just do something like this and get there. And market might take its time. These are noise. Once you understand where the market is going, all this noise will not really bother you. So that's the concept of understanding the structure mapping. Once you understand the structure mapping is like you understand the price action. The advanced way is just what we call structure mapping. It's all about price action, nothing else. So let me show you how I was able to analyze this trade. And look at this. When we had a break of structure here. So I was able to establish my low here and my high here for now. And all I do is to look for the last pullback that the market did on its way to this hub, on its way to this hub. So where is the last pullback? You can see this was the last major pullback that the market did. So I was able to establish this, and I knew that this is the liquidity that come immediately after. So I have two POIs, both in higher time frame and in the lower time frame. I only have two POIs, and the first POI is the one that rests below my liquidity point, which I call inducement. All these are also liquidity. Don't get it wrong. All these are also liquidity. All these are liquidity. But this is the concept. The first liquidity point, we are expecting the market to take the first liquidity point and return. But in case this first POI failed, we expect the market to look for maybe extreme if there is extreme. But in this case, I was unable to find extreme. And once I was unable to find extreme, two things happened. Let's say you have a structure like this and market take out this low. This serve your first liquidity point. If all these other block has been mitigated, it means that two things will happen. Let's say this one now fail. It's either market come below here, sweep this low and continue to the upside, or market come below here, change character. That's at the second sign. The third sign is you will see market come here and market will reverse without, irrespective of whether there is liquidity or not. It means that market has taken out, irrespective of POIs, it means market has taken out all the liquidity that the market needs and they still want to go up. So probably maybe in daily time frame, there is no POIs. But if you go to maybe weekly, you can see a POI that is holding this market here. So the concept is a probability thing. You prepare for everything that can come. So and you put your mind in a probability concept so that anything can happen. And once you understand that anything can happen, you just play according to your rules. So look at this. When market mitigate this level, market come above here. And sweep above here. And for me to confirm break of structure, I must see a candle close. Not one, maybe first attempt do not close, second attempt, third. As long as candle close above here, then I consider it as my break of structure. But as soon as it is, it's not a break of structure for me. I just see that market just come to this level to grab liquidity. This level to grab liquidity. And it's a sign for deeper pullback. It's either market did a deeper pullback to extreme or change character. It's a sign for deeper pullback. So I understood that. And what am I supposed to do? Once this happens, it means that your inducement which will be shifted from here to here, because if you look at this from here to this level, you will see that this was the last pullback that the market did to take out this high. And it means that your liquidity level, your inducement level is here. And your decisional POI will be here. And you see, market responded again to this decisional POI. This one, we are not using it again. This one, we are not using it again, because this is the new liquidity high that the market created. So you will see that market got to this level and reacted. I will go to 1 hour here and start buying. Maybe I had 1 or 2 trade here, and at the end of the day, I had 1 loss, and market closed down. So immediately I saw that market closed below this, come below this level. I knew that it's either we are coming down here. If you look at it, these are liquidity. These are liquidity set up for the market. All these are liquidity. So it's either market come here or market take this type of liquidity. Maybe this market might also need this and stop at this level, probably mitigate something, because I'm not seeing any other block here that I can use as my stream. So I'm preparing for whichever way that happen, and market will go up. So in that case, I will go to, let's say I was able to establish that level, that okay, this level has been taken out. And in this case now, what I need to be looking for is just sell. And I'll just go to my lower time frame and start selling towards this downside. And look at it. If you go to your lower time frame, how will you be able to capitalize on this move? Let me show you. This is how I was able to capitalize on the move. So immediately market come below this red line, I just went there, start marking my 1 hour time frame. And you can see, look at this. Market start coiling down. All I want to see is something like this. I want to see is something like this. Then structure. Once structure is confirmed, I knew that I can start positioning for my own entry. And as you can see what the market did. Let me remove this. See what the market did. Market was coiling down from here. You can see market took out this last pullback and do what? And give us break of structure. So it means that this high must be protected. And market refused to come here, because this will serve as our new inducement, because this is where the last pullback was. If you understand how I pick my valid pullback, you can watch my video. And market created another one here. You can see market actually came there, sweep this high and drop. I told you, you don't buy, you don't sell below here, below your inducement. Allow market to take it out and you can now sell. But in this case now, me, I will be waiting for here, because this is my extreme order block. This is my order block that is associated with fair value gap. This is where I will be waiting. So this will be a miss trade for me. Then what am I supposed to do? I will reposition again. This is break of structure here. This is break of structure. And what am I supposed to look out for? Immediately market break close below here with this candle. All I need to do is to first look for this and expect this move to come. But you can see market push up like this and come down without coming to this level. So I will wait patiently and shift my new inducement to this level. So now I can now mark my other blocks, my entry zone. So first entry zone will be this. As I said, the first order block after your the immediate order block after your inducement, and the extreme will be the extreme order block, but must associate with fair value gap. See exactly what the market did. So in this case now, I can easily set a limit order here, because I knew that this high, this high must be protected, because this is our structure. You can see limit order here, target here. This will give me 1 to 4, but in the real sense, I take 1 to 3. So I just want to shift this from here. Then let's say I also set a limit order here, because I knew these two POI is the only POI that is valid. Every other thing is a trap. That's why we call it SMT. Then my stop loss is here. But based on my experience, I knew this is high probability, but I don't just want to assume. So market might mitigate this level and come down. So you can see I will have a SL here, and this will deliver 1 to 4. So if I reach 1% here, I had a loss here, which is -1 and +4 here. So this setup alone give me +3. This is where you will also have issue. This drama is an is a drama. All you need to know is to just know that as long as market gets here, the next level target for this trade is here. Forget about the drama. The drama can come like this. In fact, market might nearly hit your TP and still go back, and at the end of the day will come. Those are drama, and those are the concepts designed by the market to make you emotional, most especially if you don't know what you are doing. So, where is our new high? This is our new high that the market created, and this is our break of structure. So, immediately we had this break of structure. What are we supposed to do? Now we have our high, but we are yet to look for our low. This is not our low yet. But for us to get our low, we have to pick our inducement. You can see this is our first inducement that the market created. The market make an attempt to come for it and drop. You can see, boom, market create another inducement. So you can see now that you have your inducement here, what are we supposed to look out for in this leg after we are able to identify our inducement? The other block above our inducement and the extreme. Those are just the two other blocks that has high probability. All these are SMT. This one are trap for you. So you don't need to, once you understand these two things, and as you can see, the same way I will set limit order, I set one limit order here, target maybe this low or my 1 to 3, and set another limit order here. Then I'll be looking for, I'll set another limit order here, then I'll be looking for this 1 to 4. But you can see these do not trigger. We only had a trade here. And this confirmed that this level will be our new level because market has created new break of structure. So this is just the process. You can see this will be our new high. This is not valid again. This has already given us trade. And immediately we had break of structure. The break of structure is confirmed after market closed below this week. This first attempt is not break of structure. The market pull back and close below. That's when we confirm this break of structure. And what are we supposed to do? We just need to look for the last low that the market created, the last pullback, which is this level. And we are not going to trade, sell under this level. And if you are to look at it, where is our extreme POI? This is not, this is so I can't find any POIs here. So, but in this 1 hour time frame, no POI. But what I know is I'm not trading below here. And if there is no POI, then what I do is to reduce my risk to half of my risk, maybe half percent. So, and another thing I used to do is to go for Fibonacci and see where 75% pullback is, which is this level above my inducements, then I can take a trade. Why? Because I know that this high must be protected if this trend want to continue, and I will target my 1 to 3. You can see how market nicely come to this level. And immediately we had a break of structure here. You can see markets try to sweep, sweep, sweep. Market refused to break the structure. Already we had a win trade here, but market refused to confirm break of structure for us. So you can see this still remain as our high. And what are we supposed to do? Knowing that this high and market sweep this level, I knew that whatever things that can happen is for market to take a deeper pullback. So I will position again. Where is my last pullback that the market did? You can find it here. Then where is my POIs that rest above my inducement? This level, this other block with fair value gap. Then where is my extreme? I don't have any extreme. Okay, this is the extreme other block. You can see. And knowing that this is my extreme, and knowing that market sweep this low, I will not want to take a trade here because I knew this sweep means a deeper pullback. So I will only position at the extreme, then put my stop loss here. Remember, I said I'm only going to enter this trade with half of my position. So maybe that this is the realistic level to target. And if I want to target 1 to 3, then I can drag it down. But this is going to be a frustrating trade. So although we actually hit SL, but this is the realistic way I take my TP. If 1 to 3 is not, if this level do not give me 1 to 3, if it's 1 to 2, 1 to 2.5, I will take it. So because this is the realistic level to take my trade. So to take my TP. So you can see the same process over and over. Market almost eat your TP. This is what I said. Market almost eat your TP. And probably if you are emotional or you you are not sure, or maybe you are very reactive, you can move this trade to break even. And at the end of the day, you will lose this trade on break even. So, and market finally did what? Break structure from here. So it means that our high will be shifted to this level. So we have candle close below here. Where is our inducement? You can see this is our inducement, the last pullback that the market did. And this is our order block that rests above this inducement. And where is our extreme order block? This level is our extreme order block. You can see that the process is the same over and over. And I will lay an ambush here by setting limit order here, put my stop loss here, target 1 to 3, at least I have 1 to 3 in this case, then lay another ambush here. Whichever one that the market respects, I'm in. So you can see market do not come to our extreme. So we had a win trade here. And our high will be shifted to this level. These are how the market moves most of the time. And we can say these are our break of structure. But why I do not mark this level as break of structure is because market do not have any inducement and market do not take out this high, sweep any inducement. So this is just a random normal pullback. And immediately market close below here, market come, not close, come below here, then I can mark my inducement. Then this level will serve as my last pullback. How do I understand? You can see it's very simple to identify. You can see this is how the pullback work. You can see this was the last pullback before this level was taken out. So it's very simple. Once you are able to identify these three concepts, inducement, you don't sell below this level. Allow the market to come above it. And you can see market sweep this level and come. I can't take this trade because no other block. So, and the if I take trade based on this, the SL will be too big and it's not really going to make sense for me. And if I still use my 75% Fibonacci, you can see it's not up to my 75% pullback. So that's why I will ignore this setup. But at the end of the day, market gave break of structure. And where is our inducement? Our inducement will stay here because this was the last pullback that the market did. And this one do not also have other block. So, and let's say I use my Fibonacci retracement, and I try to take a trade here based on 75, then this will now have, I will now have this as an SL trade. Yes, you can see you can't do without SL. It's part of the game. So I will have one SL here. And at the end of the day, I will mark this as a change of character. And I will also doing what? I will want to buy here. I will be wanting to buy here at this level. And because this level will serve as my inducement, because change of character has happened, this level will serve as my inducement, this will serve as my extreme POI, and I will also do what? Lose 1% here. Remember, the higher time frame POI is telling us to do what? To start start selling from here. You can see from here we've been selling. So this double change of character now will signal to me that I have to calm down because I had the loss here, I had the loss here, I have to calm down. Maybe this buying momentum is almost over. It's about to over. So then what am I supposed to do? All I will need to do is when we have this change of character confirmed here after market close above this level. So what am I supposed to do? All I need to do is to now look for my inducement because this is a sweep. But until market close above here, that's when we can mark it as change of character. So, and this low is not still going to be our low. This still remains as our low. Because if you look at it, market did what? Sweep this internal structure, then close above. So this level now can be our low, but this is going to be our major low, our major order block. This low is still active because of what? This is not a confirmed break of structure from the beginning. So, but for us to now confirm this, you can see market also came back from this for this low, came back from this for this low, and did what? And push up. So this is a confirmation. This is like a kind of confirmation that buying momentum is coming in because you can see that market is just grabbing liquidity, pushing up. So this is the trade that I actually position for, but I want all this sweep to be confirmed before I will now start engaging in buying momentum again. So this is the liquidity, the inducement, the last pullback that the market did before it closed above here. Then this will be the inducement, this will be so you can take a trade from here, then target this high based on the same process. And if this one fail, then this is the realistic level to come and take this trade and target this high. Why? Because all this will serve as a liquidity for this market. And as you can see, this is also fair value gap. This is also fair value gap. So this is all you need. If this fail, come and take your almost 1 to 4 here. This 1 to 4. And if this play out, this 1 to 3, you have a good trade. So after this now, let's say I do not, and market come above here, create here. Now close above here confirm to me that market is not interested in low again. Market is now interested in buying. Then I'll mark this level as my low. Then I'll wait for liquidity to be taken out, POI mitigation, and set my inducement here. Then wait for market to come back and come and do its things the way he has been doing it. So you can see the way he has been doing it. So if you look at all these things that I explained, we had a loss here, we had a loss here, which is -2. This is +3. It means that we are running +1. This is break even. It means that we are still running +1. This is +3. This is +4%. This is +3. This is +7%. This is +4. This is 11%. -1 that we will lose here. This is 10%. Look at this. So this is a 10% win trade and it's consistent. The approach is consistent. Let me check how long it takes for this trade to play out. Let's say we started trading from here to this level. So this is less than a month. So this is 28 days. So in a month, if you have 10%, you are good, bro. So you can see that this concept is profitable. The most important thing is that the process remains the same. And the more you are consistent with this process, the better you will become. So that's it for this video. I hope you learn 1 or 2 things. If you have any question, you can drop it and I will respond to your question. Bye for now.